Since the 27th of March, the South African government placed the country under a lockdown. 2 months down the line, we are still reeling from the after effects of this pandemic. This pandemic has brought the global economy down to its knees, with crude oil going to record lows, in fact below zero. Global markets were sent into a free fall. The currencies weakened significantly. South Africa was not spared from this pandemic. In fact, many believe that we are still to see a significant impact in the ensuing months. In this episode, we're shifting to the economic view of the lockdown, and it gives me great pleasure in welcoming Abdul Azeez Davids, from a portfolio manager of Kagiso, a chartered financial analyst, and we'll be discussing the very interesting topic, surviving and thriving through a pandemic. Assalamu alaikum, Abdul Azeez.
Wa alaikum salam wa rahmatullahi wa barakatuh. Shukran for the opportunity.
No, it's an absolute pleasure having someone of your caliber in our studio. I think perhaps we can just start off or kick off the discussion in terms of just understanding what the global impact of this pandemic has been to date.
Shukran again, and I think, if one starts on the global side of things, what is quite significant is that, and you will probably use the word unprecedented frequently throughout this interview, because this is really unprecedented, the scale and the magnitude of what has happened globally and in South Africa as well. And I think, if one looks, in my experience, I've got over 20 years of investment experience. Previous sort of outbreaks of diseases like SARS and MERS, 2014, 2011, for example, those were quite localized. SARS was quite localized in Asia, MERS was quite localized in the Middle East. This is the first sort of global outbreak that we've seen. And clearly, as we all know, the World Health Organization has deemed this a pandemic. So that has got global implications. And unfortunately, what we have seen is that China was the first country to have a severe lockdown. That started in January in China, in Wuhan, where the outbreak originated from. And most countries globally have followed similar patterns of lockdowns. I think in a global context, most countries have severe lockdowns, then they ease the restrictions after a period of time. And if one looks at the Chinese lockdown in Wuhan in particular, that was about 70 days. And since then, as you've mentioned, South Africa has gone into lockdown. We've surpassed the 70-day mark already. And clearly there is significant economic impacts from that. Now, you've alluded to a couple of those impacts, and we'll unpack that as the interview goes along. But I think what is quite significant was the fact that with the lockdown, your economic activity almost ceases. You've got the sudden stop phenomenon. And that has significant implications for the demand for goods and services, and also the supply of goods and services. And similarly, we've seen that impact translate both in terms of the real economy, in terms of goods and services, international flights, freight, all of those travels being impacted. But then also what we've seen, the economic impact on our own economy as well. And as we go along, we'll unpack certain aspects of that. But I think it has been quite a significant impact. And let's not forget, we haven't seen the full scale of it. And only in a couple of months' time will we see the true economic impacts as economic data releases come to the fore as well.
So perhaps you can elaborate a bit more in terms of what we can expect to see in the ensuing months. I think the president has extended the state of national disaster by a further month. And that will have significant impact on the economy. Perhaps you could just elaborate on that.
So if one looks at the immediate impacts, typically what you find is that when there's a severe lockdown, you typically have only essential workers being allowed to travel, being allowed to operate. And anything essential is deemed to be, as we know, the medical fraternity, the medical industry, but also essential food groups, the delivery, the production of food, etc. The peripheral economic activity and services are typically under severe lockdown restrictions. And in the South African context, that typically accounts for more than 50% of our economy. So theoretically, and I'm saying theoretically because we haven't seen the actual numbers yet, if you shut down half of your economy under severe lockdown, that effectively goes to zero in terms of economic impact. So this started in March, so the tail end of the first quarter, and then effectively for the full second quarter, from March to the end of June. So we're likely to see a significant contraction in the second quarter GDP numbers in South Africa. And that will mean that, if one looks at last year's base numbers, we hardly grew in nominal terms last year. So if you take last year's base, you will probably see a 50% reduction in the Q2 number. And that is quite severe. And then from there now to make it up in quarter 3 and quarter 4 for the remainder of the year will be quite a challenge as well. So I think, just purely on the numbers, we're looking at least a 10% contraction overall for 2020. Practically what that means is that, as we know, from hairdressers to salons to, entrepreneurs, they're still not allowed to operate. So those lockdown measures will still impact them quite significantly as well. And I think from there, what we are likely to see is that a gradual progression. I think most people will still abide by some lockdown measures even after the lockdown is lifted as well.
Yeah, so you alluded to quite a few of the impacts. Let us not forget that we were downgraded to junk status prior to this pandemic, and the effects of that was already significant. So perhaps for ordinary citizens, what specific guidance would you give to them during these trying times?
Yeah, I think very importantly, we titled this the topic "How to Survive and Then Thrive." I think we first need to survive before we can thrive, and many South Africans, unfortunately, are in survival mode. As you've rightly pointed out, in the backdrop to the pandemic and the lockdowns, was a small matter of Moody's downgrading South Africans' sovereign rating, and that had ramifications for some of our capital markets. And initially we saw the rand react quite significantly. The rand started the year at around 15 Rand 50. It blew out to over 19 Rand to the dollar. More recently it has strengthened to below 17 Rand again. But significantly, what does that mean for the man in the street? What does it mean for the ordinary consumer? Anybody that has debt, for example, would have seen an initial increase in their borrowing costs. Subsequently, we have seen significant and aggressive intervention by our Reserve Bank. So they've cut interest rates by almost 3%, during the period of the lockdown. So at least that gives us significant breathing space in terms of anybody that has a mortgage or that has a car loan, for example. They should be seeing a significant reduction in terms of the monthly payments they need to make. And we'll touch on how to manage that as well in a second. But I think just to answer the question, we have seen borrowing costs actually come down during this pandemic because of the aggressive intervention by our Reserve Bank. What we've also seen is that with lockdowns and with a fall off in demand for anything from goods and services to your basic goods, inflation has actually fallen as well. Notwithstanding the fact that the rand has depreciated and actually gone, as I said, from the 15.50 to touching 19 Rand. So that means that actually a basket of goods and services should in all likelihood have at least stayed the same or actually marginally increase over this period as well. So for many households, the same basket that they would have bought in January should be up between 5 and 10% now at the current point in time. So at least, from that point of view, we're not seeing significant or rampant inflation. We're not seeing significant increase in borrowing costs for the ordinary consumer. And I think, as we know, the South African government has also announced significant stimulus measures as well. We call it relief measures because it's not really, the quantum of about 500 billion Rand, it's more of a relief measure rather than a stimulus measure. But at least that, from a financial point of view, to the extent that people are allowed to work and earn what they've been earning, they should be okay during this period as well.
Yeah, I think that's an important fact. So the president, and I think we applaud him for the measures he put in place and the speed at which those were implemented. Perhaps you could unpack that just a bit more for the ordinary citizens, the ordinary man in the street, in terms of what relief measures there could be for them.
So for many people, I think one of the key characteristics of South Africa as a country is that we've seen significantly high unemployment numbers even before this pandemic and before the coronavirus came to South Africa. We were running over 30% unemployment in the country. Anecdotally, all of the reports that we've seen is that unemployment is well above 50% at the moment. So I think the immediate, and it might not sound like a lot, but the 350 Rand, let's call it a social grant for anybody that's unemployed, for example. I think that is quite significant for somebody that had zero to start with to now receive 350 Rand on a monthly basis. And that's for a 6-month period as well. That is a significant and a welcome start. I think, as we know, there has been accessing of the unemployment insurance funds, the UIF fund. So anybody that has been impacted by the pandemic in terms of either not earning their full salary or just a portion of their salary can apply, and the employers can apply, and would have received now already 2 payments, the April and May payment. I think June payments are also in process as well. So those are direct help and assistance that many people would have had access to, and obviously receive as well. So I think those are very welcome initiatives. And then for businesses and for struggling entities, there has been direct financial assistance via the banking system as well. That's another 200 billion Rand that has been made available. And effectively, for any bank lending to an entrepreneur or to a business, the government is basically saying we will guarantee the loan. So that loan guarantee system of 200 billion, that's also quite significant, because it should allow companies to tide them over for the next couple of months while we see, the full impact being alleviated gradually over the coming months as well.
So many corporates have got CSI programs that they do have in place, and I was just wondering if there's perhaps a knock-on impact, or whether we would see an enhancement of those programs during these times. What's your view?
I think already we have seen significant, initiatives on that front, and clearly I'm not going to name drop here, but many of the large sort of corporations have done that. I think to the extent that companies have been less affected, so if one think of the food companies, for example, they clearly would have been less affected than, car dealerships, for example. There is a moral obligation on them to plow back some of the windfall profits during this period into society. And I think, it's quite commendable that many companies have done that. So social initiatives, the food parcels drive, many companies have initiated that of their own volition as well. So they haven't waited for government to do that financial assistance, or the food drives, etc. And I think that's been a key feature of our South African economy. Even the Solidarity Fund itself, it's a very novel concept. And I think globally we haven't seen other countries have similar sort of initiatives, where government has basically said, we will seed this fund by 200 million. Let's see what private enterprise can contribute. And I think the contributions have been very well received and very significant as well. So I think from that point of view, businesses, the man in the street, anybody that can afford has made a contribution as well.
Yeah, and just in terms of household income, there could be some reduction in terms of the income that people are earning during these times. And notwithstanding unemployment, that could also play into this. What advice would you be giving to households during these times in terms of looking at the actual spend?
Yes. This is probably the crux of our discussion here today, because it's talking first of all to the surviving part, and then to the thriving part of this pandemic. Let's unpack that for a second. If one looks at how to survive, I think let's start with those households that have been less affected. So people that have been able to earn more than 80% of their previous salary, for example. I think they are in a very good position to actually, if they have any debt, mortgages, car loans, to continue with the payments that they would have made in January or early in the year. Because what you then find is that you can actually pay off your debt quicker. Because as I said earlier, we've already seen almost a 3% reduction in interest rates. So mortgage payments would have come down, car loan payments would have come down. If you have the ability, first of all, and then also the discipline to continue with your previous payments, you're actually paying down your capital much quicker. And I think that is probably the best advice anybody can give you, is to pay your debt quicker and try and not have a lot of debt during this period. So I think that's the first point of departure. I think from there, what we then have is that, as I said, most goods and services, the inflation or the increase in prices wouldn't have been substantial. However, what we are likely to see is higher inflation down the line, because as I said, the rand has weakened, it has strengthened more recently, but on a year-on-year basis, the rand is still significantly weaker than it was last year. And that will have a delayed impact in terms of inflation. So consumers need to be aware and need to almost steel themselves for high inflation closer to the year end. And as a result of that, to the extent that you can create breathing space or breathing room in terms of your monthly budget, you should try and do that. So reduce the amount of committed expenditure that you have, either in terms of loan repayments or debt repayments, or fixed sort of repayments that you need to do, so that when the inflation does pick up, you have that breathing space to accommodate high inflation as well. And now let's talk about those consumers and viewers that are either in a situation where they've received very little of their salary or no salary at all. Clearly for those individuals, government, in terms of the UIF facility, I think they're paying out the maximum of about 6,500 Rand. So 6,500 Rand doesn't sound like a lot, but one can work with that. I think what is important is to prioritize essential goods and services, your food, etc. Anything else beyond that can actually be delayed. If you have sort of monthly debit orders, etc., that are for non-essential sort of items, speak to your financial services provider and make arrangements and say, we're in this. And most institutions are actually very understanding. They know that the economic impact is quite severe. They know people can't earn their normal salaries, so they're quite understanding regarding that as well. So use that as an opportunity to. I think the worst thing to do is to cancel debit orders and not communicate. Because there is an obligation on the consumer and our viewers to communicate with their financial institutions before they cancel or stop debit orders, etc.
And most of them have given relief measures in
exactly
2 months or 3 months.
That's right. So I think that will also create significant breathing space as well. And then, that does leave you, for many people, it does leave them actually significant breathing space, even in a reduced income environment as well. And as a result, what you then should prioritize beyond your food and basic needs is to try and save. It might sound counterintuitive when you've got a lot of debt somewhere else, or you've got, debit orders that are running, to say that put a hold on those debit orders and then still save. But I think this environment is affording our viewers and our consumers the opportunity to reprioritize your budgets. And I think even in a constrained income environment, to have some portion of the income that you can save, it takes discipline, and it takes a lot of sort of self-discipline, but it can be done, because as I said, your income is lower, but if you reprioritize your budget, it's amazing what you can do with a limited budget as well.
So Abdul Azeez, you spoke about the reduction in household income that people may be experiencing. Perhaps you could crystallize a bit more in terms of the practical tools or tools that are available, and some practical tips in terms of how one would go about implementing that budget.
Yes, I think it's a very important question, and unfortunately in South Africa, I think it's a necessary skill that we have to develop. And I mean, I studied economics and business economics at school and university, and we never covered this in any of the modules or in school, for example. But I think it's such a necessary skill to have and to develop as well. And I think for our viewers, if they do have a pen and paper at hand, maybe to just jot down a few themes and topics that I'll cover now. Because for many people, they know exactly how much money they earn. They get their salary slip or their wage slip, and they see the net pay number there. And that's typically, for most people, 100% of their monthly income. Because most people work for a boss, or that's the income that they receive. But what is typically uncertain or not clear is where the money actually goes and how we actually spend our monthly income. And budgeting for many people, for most people that are financially literate, is a common sense thing. Many people do it in their heads. But I would encourage many of our viewers and consumers to actually draw up a monthly budget, put it down on paper and stick to it. Because that gives you that financial discipline as well, especially during these trying times. As we spoke earlier, many people would have received or have seen a reduction in their monthly income. Now, commensurately, our expenditures need to also reduce as well. Now, we spoke earlier about some of the relief measures that people received from either financial institutions, etc. If you've got monthly debit orders, for example, many institutions, please do make contact with them first before you cancel or stop debit orders. But many institutions actually do understand, times are tough, so they understand when you cancel the debit order or put a stop on the debit order. And that gives us a lot of breathing space as well. As we mentioned earlier, with the reduction in interest rates that we've seen, our mortgage payments or the installments would have come down. So if the 3 buckets that I mentioned, let's start with the most important bucket, and that's your monthly debt. So if you've got a mortgage bond, if you've got a car loan that you're paying off, try and keep that number the same. even if in a scenario where, as I've mentioned, interest rates have come down, so we now have a bit of breathing space, the statement that you would have received from your bank now would have indicated a lower installment compared to January, just by virtue of the reduction in interest rates. But try and stick to the January number. And that will become very important in a minute when I unpack that. So, but let's prioritize that, because we don't want to lose our houses, we don't want to lose our cars, and those are essential sort of items that we can't afford to lose in this period. Any other debit order, make arrangements, because as I said, for most people income is lower, so we need to reprioritize spending. And then work out a food budget. For most people, actually, believe it or not, the average household food budget per individual, per adult, is about 350 Rand a month, which doesn't sound like a lot, but in the context of the 350 Rand payment that the government is making, it's very little, clearly, as well. But for most households, if you're a household of 3 people, a husband, a wife, and one sort of child, I mean, we're looking at about around 1,000 Rand as a food budget for the month. So that's a number typically, and you can anchor to that, you can work around that number as well. But that's priority number 2. That goes into your second bucket in terms of essential spending that you need to do in terms of you need to live, in terms of food, etc. Many people confuse that bucket with non-essential spending like new shoes or new clothes, etc. Many people are in the fortunate position to have clothes and shoes that are still in good order and good working condition. That is not essential. Please, for the next period, it's probably not going to be essential until the end of the year or next year. So in that second bucket, as I said, that should only be your basic food items that are essential for you to be as normal as possible in terms of your daily consumption needs. The third bucket is now where we talk about other issues or other less essential but slightly higher than discretionary spend. So to the extent that you can, make contributions to those debit orders that we talked about in terms of the school, your rates, utility bills. Make some contribution. Maybe if you can't afford to pay the full installment, don't pay the full installment, but at least make some contribution to it. Because unfortunately, we know that rates and taxes, I mean, those are realities of life. And what you don't pay now will come back to bite you later on. So we will have to pay those amounts anyway at some stage in the future. And in this bucket, I would also group at least some part of saving, even if it is a 50 Rand. Put away a 50 Rand a month, or as much as you can afford, after covering some portion of those utilities and rates and taxes that I've mentioned as well. And in that way, and just to recap again, your first priority is your mortgage payment, your car loan. Those are essential. You can't afford to lose those items. So, and to the extent that you can, maintain your installment in that bucket. Second bucket is food. And maybe sit with the family and discuss how much do we actually need to spend on food. As I said, for a family of 3, 1,000 Rand is basically the minimum guideline for a month. But work around it. You can actually either make it slightly higher or slightly less to the extent that you can. And then the last bucket, as I said, your utility bills, your rates, but also something for saving as well. And in that way, and this is a discipline that you can actually stick with even when this pandemic is over. Because it will actually mean that you can then see exactly where your money is going every month. You can keep track of it, but it also allows you the discipline and the breathing space to actually put more away for saving, when things revert to normality as well.
Yeah, and if you look at it, if you expand it a bit further, I probably would add things like, if one had the opportunity of having items such as international travel or holidays, normally people have vacations in December. Yeah. Other areas like we're working from home.
Yes.
So there's a saving in terms of the fuel that you use
fuel
per
and
month.
Transport, yes.
So the advice is to plow that into your debt first and then reprioritize what else you need to use.
That's
right. That more or less what?
That's right, because in the olden days, people put stuff on lay-by, for example. My grandparents would go to the shop and say, okay, let's lay by our, they call it the luxuries for December holidays. And then they'll come in every month, pay down a 10 Rand or a 20 Rand. And at the end of the year, they get a 200 Rand basket of luxuries that they've paid off during the year. And similarly, a budget works exactly the same way. It's a discipline of putting away money regularly, and you'll see the benefit of it at the end of the period as well.
So I'd like to tap into that a bit more. If one were to look at the investment statements, whether it be long-term investments or pension fund investments, especially stock markets or shares, you would have probably gotten a heart attack more than
more so in March. Yes,
more so in March.
Yes,
and there are various factors that play into that. So what's your advice in terms of looking at those statements now, and what should one actually be doing now? Should we be changing our investment plan or our outlook, or should we be investing more, or should we be retracting?
Okay, so those are very important topics, and first of all,
I think half an hour is not going to do enough, but we'll probably do that for the next episode.
That's right. The first disclaimer is that, you know, I obviously can't give advice to our viewers or to consumers, but I think, you know, it's important that one needs to look at what happened in March in context. So I think, as we've mentioned, you know, the lockdowns in South Africa started tail end of March. We saw the initial severe impact of that. So our domestic market fell by over 30% in March. And March happened to be quarter end as well, 31st of March. So right at the worst point in terms of your monthly statements or quarterly statements, you would have seen between a 20 and 30% reduction in your investment sort of value. I think at the time we were fielding calls on a daily basis from worried investors. And, you know, our first sort of, you know, piece of information that we shared at that stage was to say, do not panic and do not exit your investments, because if you exit an investment after it's fallen by 30%, you effectively crystallize that loss. And, you know, fortunately, we've seen a significant recovery and rebound in markets already. So April we saw recovery, May we saw recovery, in the early part of June we saw recovery as well. So markets are up about 20 to 25% from the lows already. So we haven't, you know, retraced or wiped out the previous losses from March and earlier, but at least, you know, we 80% down the line to recovering that as well. So the statements are looking a lot healthier compared to the lows of March. The second part of your question relates to what should people be doing right now. I think to the extent that they can, they should just leave their investments. Do not try and, you know, access your investments if you can't, if there's no need for you to do that. Clearly, it's different if people are under stress and, you know, your income is, you've got zero income or very little income and you need to survive. Then, you know, it's probably prudent to take some, you know, liquidate some of your investments, but then reprioritize in terms of looking at those investments that have probably done the best during this period, because then you're crystallizing profits. Because what you don't want to do, as I said earlier, is to crystallize losses. So, I mean, most people will probably have one or two different investments with different institutions, and choose the one that actually has made you a profit or close to a profit, you know, during this entire period, as opposed to the one that is, you know, deeply in the loss at the moment. Because, as I said, you know, the one that is in profit, there you can actually be taking profits. But, you know, to the extent that people don't have to access those funds, it's probably best to leave it there. We still think that coming out of this pandemic, you know, the one thing that we haven't spoken about is the magnitude of the stimulus that is being administered to the global economy by most governments and central bankers. And, you know, that is quite significant. I mean, the US, they're looking at $6 trillion of stimulus. And that is a key driver and a key underpin for global markets as well. So bear in mind that, you know, we have survived previous, maybe not to the scale in terms of this current pandemic, but I mean SARS, MERS, the global financial crisis, these are all in the rearview mirror, and markets have recovered from those events as well. And likewise, it might look very bleak at the moment, but markets will recover and has started to recover already. So to the extent that people can, rather leave your investments, it will recover, we will survive. And, you know, it's just focus on your expenditure side of your monthly budget. And to the extent that you can, rather leave your investments where they are.
So the good news is, Azeez says there is light at the end of the tunnel. So we'll hold into that. Yeah. But perhaps we can shift gear now from survive. We've spoken about how to survive this time. How does one thrive in this time?
Yeah, now this is where it gets exciting. They always say, don't waste a good crisis. And, you know, we are still in crisis mode in South Africa. There are a couple of things that has become quite apparent. Firstly, the rand, as I said, is a lot weaker compared to last year. And that gives us as South Africans a competitive advantage over the rest of the world. Because suddenly, if I was earning 10,000 rand when the rand was 10 rand to the dollar, at 15 rand to the dollar, you know, effectively my 10,000 rand is worth 50% less in dollar terms. So that means that compared to somebody sitting in New York or sitting in London or Germany, wherever, I am a lot more competitive in terms of the cost of my labor. What does that mean? I think, you know, the internet has allowed people to transcend, you know, country borders. I think also what we've seen in the South African context, most of the cell phone providers, the fixed line providers, they've come to the party. We can now, there's a lot of places where you can get free internet. There's a lot of places where data is available. Most of the service providers have made allocations to schools, institutions, etc. And we should use that as an opportunity to leverage off our skill set. Now clearly, there's two impacts here. Firstly, for you as an individual, if you do not have a skill set and you would like to acquire one, now is a great time to, I mean, there's so many different apps and online facilities where you can upskill yourself as well. And I think that's the first thing. To thrive in a pandemic means to thrive, you know, intellectually as well as financially. Intellectually, let's upskill ourselves. Use this opportunity to learn a new skill. I mean, I'm busy trying to learn data science, for example, and just upskill myself in that way. But likewise, you know, many people can, you know, online resources are available where you can learn more new skills. I think the one thing that we've learned throughout this period is that one can't be one-dimensional, for example. If you're a hairdresser, for example, you're still under lockdown. What are you doing with your time? You know, go learn a new skill. There's so many, as I said, to learn maybe basic programming. And I think today, online services, anything from, you know, online delivery to online fulfillment, all of those are necessary skills and services required. So there's a great opportunity for our viewers and consumers at very little cost, if any, to learn new skills. So that's the intellectual thriving part of it. Now, how do you thrive financially? As I said, you know, there are a whole host of services that one can provide by sitting in your living room. You don't have to leave the house. So, you know, you've got global online recruiting sort of facilities and fora where you can make your skills available. Redraft your CV, put it out there on the World Wide Web, for example. And in that way, make yourself relevant to people that are looking for services. I think South Africa and the Western Cape in particular have a unique opportunity in that we, an English-speaking sort of domicile sort of area, where English services are in demand globally. And as I said, you know, we are competing. We shouldn't see our competition as being somebody in Cape Town. It's actually somebody sitting in Bangladesh or in India. And to the extent that we can't, you know, access those sort of networks as well. There are maybe people that are looking for call center operators. You don't have to leave your house, etc. So I think there's a whole host of services that one can access globally and that transcends borders if one, you know, taps into those sort of facilities as well. And as I said, just lastly to conclude, I think what is quite significant is that let's use the currency sort of weakness as a tailwind rather than a headwind. We know that our TVs are going to be more expensive, our Samsung or iPhones are going to be more expensive, but we can also benefit and profit from the weaker currency by making our services and our labor global as well.
Okay, perfect. Shukran, Abdul Azeez. I think it was a very informative and relevant discussion. Yeah. Perhaps at a later stage we'll call you back into the studio to perhaps cover some other aspects of the finance area. To the viewers, please do follow our social media pages. There will be weekly videos that will be presented by the Academia Digital platform. We hope that you enjoyed the discussion and hope to see you soon. Assalamu alaikum.